$612 every quarter from one $8,000 investment that most people would call boring.
That's $2,448 a year from $8,000 sitting there doing nothing but paying me.
In this video, I'm going to show you exactly what this investment is, the real yield math behind it, and what happens when you start scaling it up. Stay for the scaling part. It gets interesting.
First, let's talk about why boring wins. Exciting investments get all the headlines. Crypto, meme stocks, whatever's trending on social media this week. But boring? Boring quietly deposits money into your account every 3 months. No drama, no stress.
The investment in question is a high-dividend ETF. One ticker. Instant exposure to dozens, sometimes hundreds, of dividend-paying companies. The kind that have been paying shareholders for decades.
Think about what that means. You're not betting on one company surviving. You're spreading risk across an entire basket of businesses that are legally committed to sharing their profits with you.
Now let's do the actual math. $8,000 invested. Average yield on a quality high-dividend ETF sits around 7 to 8% annually in many cases. Let's use a conservative blended yield of around 7.6%.
Wait, you said 612 per quarter at the start. How does that work? Great question. Because this isn't just yield sitting flat. These funds often hold positions that throw off special distributions, covered call premiums, or growing payouts over time. That bumps the real number up.
On an annualized basis, 612 per quarter is $2,448 per year. Divide that by $8,000 and your effective yield is just over 30.6%. Wait, no, let me be clear. That's not the starting yield. That includes growth of the position over time. The initial yield was the boring 7 to 8%. The rest came from the investment appreciating.
Here's what a realistic income growth curve looks like on an $8,000 position with dividends reinvested over 5 years. Watch these numbers.
That's not magic, that's compounding. Every dividend you reinvest buys more shares. More shares means more dividends next quarter. It snowballs slowly at first, then it picks up speed.
Now let's scale it, because 8,000 is just the example. What if you put 20,000 in at the same yield? You're looking at over 1,200 a quarter, 50,000, 3,000 a quarter, 100,000, 6,000 every 3 months, just from one boring ETF.
You don't have to start at 100,000. Nobody does. You start at 8. Or even less. You add consistently. And you let the compounding do the heavy lifting while you live your life.
If you want the exact ETF names and the full breakdown of how to set this up in your own account, comment the word INCOME below. That's the magic word, INCOME.
See you in the next one.